Want reliable backtests? OANDA's historical data can power accurate strategy testing. In 2 minutes, we'll fetch data, save CSVs, run a backtest, and read annotated charts. OANDA provides candles, tick-level feeds, timestamps, and multiple instrument timeframes. You'll need an OANDA account, an API token, and a backtesting environment like Python or R. We'll show API calls, CSV downloads, short code snippets, and annotated result charts. Let's start by requesting historical candle data from OANDA's v3 API. Make a GET request to the v3 instruments candles endpoint. For example, get /v3/instruments/euro_USD/candles with start, end, and granularity. Include an authorization bearer token header and accept application/JSON in your request headers. Handle rate limits and pagination by requesting time slices, keeping each window small enough to avoid truncated responses. Use ISO 8601 timestamps. Choose granularity like M1, H1, or D, and include price parameters if you need bid, ask, or mid. In Python, use requests.get with URL headers and perms. Then save the JSON payload for conversion to CSV. If you prefer a direct download, convert the response to a CSV and make it available for analysis and sharing. Save columns time, open, high, low, close, and volume, ensuring the time column is in UTC. Convert timestamps to time zone-aware date times and align to your backtest engine's expected format. Handle missing candles by forward filling or discarding short gaps, but document any imputed data. Common pitfalls include mismatched time zones, daylight savings errors, and inconsistent granularity across datasets. Load the clean CSV into your backtester, define realistic slippage, spread, order types, and run the simulation. Here is a short example: df.to_CSV urist CSV, then df equals pd read_CSV urist, CSV parse dates equals time. Plot equity curves with markers for entries and exits to visualize performance over time. Annotate charts to show trade outcomes. Highlight a major drawdown and discuss its cause. Focus on metrics like net profit, Sharpe ratio, maximum drawdown, and trade expectancy when judging results. Avoid overfitting by testing on out-of-sample periods and validating on different instruments. Next steps: automate data pulls, schedule regular backtests, and integrate live trading checks for slippage. Download the sample CSV and code, run a trial backtest, and iterate your rules based on annotated results.